Good morning. Today, I want to talk about a really important topic, which is swing points and the questions that I ask myself before marking a swing point is it a valid swing? How do you even recognize if it's a swing point? So, a swing point is basically price making, price making higher lows. These are swings. And here, lower highs, these are swings. So now the question is which one of these are valid swings? And how do I trade off valid swings? Is this a valid swing? Is this a valid swing? Is this a valid swing? How about this? How about this? How about this? So let's start by types of swing points. So basically a swing point is a place in market where market reverses for a few moment or it reverses overall. So this is a swing point because market reverses from here. It was going down and from down we started going up. So it's a swing point. This is also a swing point because we were going up and from this point we started to come down. Although these both are really different kinds of swing point. In this you can see we did not go down by a lot. And in this, we reversed and we go up by a lot. So as a trader, our job is to identify which swing points are high probability swing points or which swing points are strong swing points versus weak swings. So this will be considered a weak swing point and this will be considered a strong swing point. So to trade a strong swing point, the best pattern is to wait for price to come to this strong swing point, which is a higher low in an uptrend. So this will be considered as a strong swing point. And when price comes here back again, then we can expect price to move up by a lot. So the time we cannot predict this, but we can wait for price to come here and then we can buy and we can predict this that it has high probability of price going up. Similarly, in a downtrend, this will be the lower high will be a strong swing point. And when price comes back, it will act really violently. So it will go down by a lot. Again, we cannot predict this, but we can wait for price to come back to this level. We have a level in our mind, and then we can sell from here. But there are also swing points that are weak. So let's say price is making high highs and high lows. What about this? What about this point, this high high? Can price come down from here? And we see time to time price coming to the previous high high, failing to break above and then goes down. And in a downtrend, we can see price is making lower low, lower low, and it comes to this lower low and then sweeps it and then goes up. I personally don't consider these as a high probability setups. The only reason is because these are weak swing points. And how about this? How about price is making high highs and now it changed a trend? How about this level? So here, this is a shift in trend. And how about this? This is also a high low technically, this point. So should we buy from here? Should we expect price to go up from here? Or should we wait for price to reach at this level and then sell from here? And how about this then? Price makes high, and it comes here, breaks, something like this. So this point. So let me start by explaining this. Here we shift the trend here. So the momentum was going up, but as soon as we break the recent high low, which was this point, we can expect price to reverse its trend and continue going lower. Although this is also a liquidity point, which we call a swing point, and this is also a liquidity point or a swing point, but these are considered weak because the trend is going downside now. So let's understand it by this analogy. Let's say there is a wall and it's a brick wall, it's a proper brick wall, and now there's some momentum, and now we try to go hit it. There could be two reactions. Either price come down and then again try to hit it and break to the upside. Or we can expect price to come hit it and completely reverse. So what I like to do is I like to price show me that there is something here which is against the momentum. Because when we are in uptrend, all the money is going towards buying. Everyone is trying to buy. And if I get a single candle here, let's say a C2, the price going up and I just get a C2, it's not a really good signal to short. I would rather much wait for a bearish FPG and or a CIST and then sell it. Even here, this is really good case. This is a lower high. This is a lower high. And we again come back to this lower high and we are in a downtrend. So this is a really good set. But if I try to buy here, it's not. Why? Because we are in a downtrend and we are fighting the downtrend. What about this? Even this is not a good buy because all of the momentum is going down. And if we just base our trade based on this swing point, everyone is trying to push the price down. And we say, okay, no, this is a swing and I get a C2 here. I will buy. I need to see some FPG or I need to see some CIST in order to make a decision to buy, which indicates that, okay, there has been a shift in trend. If not, I will continue selling it. So let's look at few examples of what I mean. Okay, let's say this swing point. So here we can clearly see that we are moving in an uptrend market. all of the money is going towards pushing market to the upside. So if I just look at a trade here, which is a C2, this is a C2 candle. If I want to jump into market early, I can sell this, I can sell here. But it's much better for price to make an FPG, react out of it, and then we can sell it to the downside. This confirms that there's been an FPG confirms that there is bearish momentum. And then we wait for a price to reach into FPG. We wait for a C2 inside the FPG and then sell from here. If you look at this is a high, this is a weak high, this is a weak swing point. Price came here, give us C2. Should we sell this? No, there is absolutely no reason to sell. We have a bullish FPG. The momentum is upside to the upside. If we just look at this candle and pattern trade it, it's not worth it. What we see is price kind of went choppy here. A lot of people are fighting that should we respect this level or not? Should we respect this FPG a lot? And it just becomes a chop zone and we just lose a lot of money here. So it's always better we wait for when we are trading a weak weak swing point, it's always better to wait for a FPG somewhere over here, a bearish FPG, and then trade out of it, rather than just directly trading the C2 out of it. How about this? This is also a swing point. Price is going up, try to go up, but now it went up. So this is a strong swing point because we are in an uptrend. So here we can clearly see the price respected and it moved really good. The only reason is because we are in an uptrend. So this is a strong swing point. Again, here, this was a high. Should we just trade this pattern? No. It's better to wait for a FPG. Where is an FPG? It's here. It's a C2. We can trade here. Although price did not go down, it did not break this market structure shift, but I still think this is a really good sell setup. There will be examples when price will just come to the swing point and then just dump, continue dumping. But for me, the better trade is somewhere over here. This will be a double top into an FPG. We get a double top. We get a trend shift by this, and then we can sell here. Or this is a good example. This is a swing point. We get a FPG here, bullish FPG, and then we buy here. So it's like this. Should we consider, let's consider this as a swing. Although we can clearly see that price is going up. We have a bullish momentum, but this is a swing point and we get a C2 here. Is it wise to just sell here? No. We need to get a proof from market that this swing point has actually worked. And what's the proof? Either an FPG, a bearish FPG, or a change in state of delivery. Unless we get either of these proofs, it's not good to short on the weak highs. Yes, but for strong, this was a strong swing point. But for these, we don't need a proof. We can just wait for the C2 and then keep buying it. Let's look at this. We are in a downtrend. Price comes. This is a swing point. It takes this swing and we go down. How about this? I just talked about this example. This is also a swing point technically. Why? Because price reversed from here. It was coming down and it reversed from here. and this is a higher low. So price swing from it. So should we consider this as a swing point? No. Why? Because we can see that we have a bearish FPG. Price is coming down. We cannot just look at a C2 and buy here. It's always better to demand an FPG or a change in state of delivery, which we'll get here, before trying to buy it. So in this scenario, it's always better to keep selling to the downside. I use these levels, I use these swings for my target setting. For example, if I sell here, this will be my drawn liquidity and I will take out my targets here. So it's better to use weak swings for target setting. For a trade at weak swing, always demand a FVG or a CISD. For strong swings, we just need a C2 or a C3. This is it. Let's look at more examples. This one is such a beautiful example. This is a swing point. This is a swing point. Why price was coming down and it reverses from here. So this is a swing point. Then we come back to the swing point and we move up. We get a C2 here. This is a, this is a C2 and we move up. So why this is a strong sweep? Because the trend is going up. So this is a higher low, higher low. And when we get C2 at the previous higher low, it's really good to buy here. And now we got a FVG, which confirms that there is bullish momentum. We see that this candle respected the FVG and close above. And this is the reason I am expecting price to reach to this level, which is a weak swing point. It's a weak swing point. So if I would have taken a trade here, I would take out the target here, but I will not sell if I get a C2 here. It's better to wait for a FPG or a change in state of delivery, then I can sell here. But if I just get a C2 or C3 at weak swing point, there's no, you'll just keep losing money. Like for example here, this is a higher high, this is a higher low. We come back to the weak point, which is a high high. We just get choppiness. Even if you try to sell here, you'll get stopped out. So it's always better for price to either make a CISD, which it did here, or a FPG, which you can see here. And then we can sell, and then we can sell from this. So the most important, the hierarchy, and how I look at making my decisions on daily time frame is, first thing I look at is momentum, which means where is price moving. So it could have three options, either up, or it is moving down, or it's choppy. Or it could also be in a range, a big range. Then the second thing I look at is, where is the closest drawn liquidity. So if the drawn liquidity is weak, that means it's a higher high or a lower low. Then I use it for setting targets. But if the drawn liquidity is strong, that means high low or lower high, then I use it for trade setups. If I want to trade a weak swing point, I demand FVG or CISD. And if I want to trade a strong swing point, I just look for C2 or C3. So these are the questions that I ask myself before making manual analysis. So you can go and look on the charts yourself, and you can make your own rules around this structure and how the thing works. But for me, I have seen this working over and over again. And eventually, you will lose a lot of money while trading the opposite swings. So it's always better to demand from price to see which side the momentum is. That's all for today. Uh, the next video I'll discuss about FVGs and the other uh, daily buys technicals that I watch for before making my analysis. But swing point was a really important topic. Which are the best swing points to trade? So I hope you like